Folks, in today's video, I want to break down one specific $1.70 stock that has a very hot setup and several catalysts attached to it. I'm going to break down everything that you absolutely need to know on the stock, and I recommend watching this very, very soon because the catalysts are all this week. Well, a few of them are next week, but the big ones are this week. And of course, as always, my goal is never to tell you what to buy or what to trade, but rather to simply inform you so that you can make better decisions yourself, and so that I can point things out that maybe you otherwise wouldn't have seen. I will go ahead and put all the timestamps down below, and we will get right into it after a word from today's sponsor. A sponsor which, by the way, is SEC and FINRA registered and regulated and protects your deposits with SIPC insurance. And today's video is brought to you by Moomoo. Moomoo is a one-stop trading app that makes it easier for users to do everything they need to trade stocks. Moomoo helps you monitor market movements, perform deep technical analysis, quickly screen for stocks that meet your criteria, and provides a community where you can exchange ideas with other traders. Moomoo offers many features that other brokers charge you for. Features such as extended trading hours, heat maps, level 2 data, daily short sell volume data, and 24/7 real-time financial news, all of which helps you take your trading to the next level. A lot of these features, especially level 2 data, other brokers charge you for. I'd also like to highlight how useful their earnings calendar is during this earnings season. You can scroll through and see which companies are reporting earnings over the next week, and the ones that have already reported, you can see a synopsis on what they released. Anyways, I invite you to sign up today with our link down below and get up to 15 free stocks. And in celebrating the company's 10-year anniversary, they are also giving out a new limited time offer where you will get 10 USD cash back when opening an account and completing your first deposit. This applies to both US and Australian users and is available via our link down below. Thank you, Moomoo, for sponsoring today's video. Now back to the content. Okay, so context. Last week, we made a video where I pointed out MMAT as one of the top play ideas. Reason being, it was in another dump and test cycle, and we were looking for it to show proof of concept and then bounce from that testing sell-off. Because last time it did that, it proceeded to run quite a lot and make a new breakout, right? Well, it's about a week later now, and finally we got the conclusion of the sell-off and then a proof of concept rally attempting to break it out, which means it now deserves another video. Let's go ahead and start with what MMAT is, and then we'll get into the setup. So, Meta Materials is a manufacturing company. They are self-described as, quote, a developer of high-performance functional materials and nanocomposites. Meta delivers previously unachievable performance across a range of applications by inventing, designing, developing, and manufacturing sustainable, highly functional materials. And by the way, they had the Meta name before Zuck. But anyways, they are targeting some specific well-known partners and customers across a number of industries because their manufacturing capacity is applicable to a lot of different industries. They also have a security division which appears to regularly receive purchase orders according to Yahoo Finance. Meta has been executing an agreement with a maximum value of US $41.5 million over a period of up to 5 years with a confidential G10 central bank customer. The new purchase orders represent a base award for continued work under the multi-year agreement. The customer may elect to increase the scope of the base award with additional purchase orders. So that's a pretty big win. You have the relevancy in terms of a G10 partner that they're working with, and you also have a massive order that could come in over the next 5 years, right? So there's some proof of concept there, and there's some catalysts on a rolling scale there. Obviously not something that I'm making an argument for fundamentally, but in terms of a hype play, yes. And on top of that, earlier this month, Meta announced it had entered a memo of understanding with DuPont Tianjin Films and Mitsubishi Electric Europe to use Meta's plasma fusion to scale a high-volume manufacturing system for film-based coated copper current collectors. A memo of understanding sounds pretty lightweight, but again, that is something that has caused runs in the stock in the past. So when you have these rolling catalysts and the company looks like it's doing stuff, all of a sudden you get rolling trading opportunities, right? And in terms of an overall business model, they are seeing a substantial increase in revenue, with the latest reported revenue up 328% year over year. And if you look at all these new deals that are coming in, you can imagine that the revenue is going to substantially grow over the coming quarters and years. But of course, like most small caps in today's market, they are a massive money loser. They are losing money at a rapid clip in hopes that one day they'll be able to scale up enough where they become profitable. So obviously, as a fundamental play, it's a tough sell. But what is the setup for a trade on MMAT? Well, MMAT, like most small stocks, had gone through a massive hype and euphoria cycle in the easy money days, and as the Fed has hammered the market, it's been hammered as well. However, the high coverage, the low float, and the suppressed price makes it very likely to have massive rally days, just like we saw today. And Matt's estimated short interest has continued growing despite the overall massive and rapid increase in share price since the end of September. The stock climbed from 70 cents to 181 over that time period, and shorts have responded by trying to throw even more borrowed shares at it. Its short interest is sitting at about 11.51% right now, according to Ortex. Now, at first glance, that doesn't sound like a lot, but keep in mind that this is a lower liquidity stock, and the amount of liquidity it would take to cover just parts of that would cause a very, very outsized effect on share price, and vice versa. The increase in shorting, aka borrowing shares and then dumping them, had an outsized effect on suppressing the uptrend, but it still managed to run quite a lot and retain, right? You go over to the options chain, you're seeing substantial concentration at the $2 strike price for contracts expiring this week. For the week after, you're seeing the same thing, $2 being the main number. Same for December 2nd. Now, $2 is not very far away from where we are in the current moment. You could easily get that in another day or two of an uptrend, but $2 just a week ago was considered a moonshot possibility. So the fact that $2 is now almost an inevitability is causing these options to become very, very high probability, and thus market makers who sold these options are having to hedge to stay neutral. They hedge by doing what? Well, usually by buying shares, and that is likely a large part of what is fueling today's rally. That's also known as, yes, a gamma squeeze. Not a grandma squeeze, that's not very nice, but a gamma squeeze. A gamma squeeze can be very helpful at amplifying moves, but once the options chain has factored in the higher probability of these higher strike prices, it then starts working against you because new contracts open up and they take out demand, or if the price goes down, market makers can dump some of the new hedges that they just bought. Okay, next, so what catalyst should you be aware of? Number one, tomorrow there is a Q4 Investor Summit conference that the metamaterials people will be taking part in. That can bring in some extra media attention. Number two, metamaterials has the grand opening of their new headquarters on the 17th, which again could gain some more media attention. Number three, metamaterials has an S1 filing waiting for approval, which specifically impacts their preferred shares that trade under ticker MMTLP on the OTCs. The S1 is a privatization form and will require the covering of shorts. Quote, once the S1 is approved, shorts will have 15 days to cover the 80 million shares sold short, and if they don't cover, their broker will cover the shares for them. When that happens and the brokers are just dumping shares, as Houston Wade, this analyst, points out, we will see perhaps just astronomical prices. For 80 million shares to cover, we will see a massive increase in trading volume, and ultimately the brokers will pay whatever price they have to. Should a short squeeze happen, $30 to $60 is the most common estimate on MMTLP, and you can see where it's trading at right now, so they are hyping it up to pump to a much, much higher number at 30 or 60. It's a long story, but the MMTLP shares have been trading up for a while in anticipation of SEC approval, which could easily come in the next couple of weeks unless it gets delayed again, which has happened several times in the past. And of course, while this is a direct impact on MMTLP specifically, it's also a broader impact on MMAT, as they do of course stem from the same core entity. Anyways, that is my take on MMAT. I think within the next 2 weeks, it's going to be a very fun battlefield. Anyways, that caps off today's video. Make sure to hit that ravishing like button and don't forget to subscribe. Thank you, Moomoo, for sponsoring us today. We appreciate the sponsorship. And of course, make sure to take advantage of that Black 60 coupon code for ZipTrader U, which will get you 60% off our one-time fee for lifetime access. And I'll put a link to that down below as well. Have a great rest of your day, and we will see you in the next video.